Hey, it's the Profit Answer Man, Rocky Lalvani. If you're new to the podcast, check out my interview with Mike Michalowicz. It's episode number 2. If you want to hear about each chapter in the Profit First book, go back and listen to episodes 3 through 13. Episode 1 is the why and how. On the Profit Answer Man, we learn money mastery without all the complicated accounting mumbo-jumbo using a simple system. Your accountant is busy documenting your transactions and creating a rearview mirror of what happened. My guess is you don't even look at the reports they sent you. If you're like most business owners, you struggle with this, and it's not your fault. We aren't taught money in school, and accountants aren't taught how to be profitable. The Profit First system created by Mike Michalowicz works, and he certified me to help you implement the system in your business. Remember, the new equation is sales minus profit equals expenses. Let's face it, without cash flow, you can't pay your employees, buy needed materials, or pay your mortgage and support your family. I help you to do that and more, so you can focus on the parts of the business you love and receive the rewards for your labor and investment into your business. The stronger you are as a business owner, the more jobs you create, the better we are as a country. Small business owners are the backbone of America, and for that, you deserve to be well rewarded. Just remember, more revenue does not equal more profit. That's why we focus on the bottom line. I want to share a few topics around being more profitable and also the power of thinking time. Making change takes time. I was just on a call with Mike Michalowicz, and he mentioned overall, they see that it takes about 2.5 years to go from your current situation to get to your target percentages that are in the book. I've been telling my clients 18 to 24 months, but maybe I'm just lucky. Part of this is that change takes time. You can't get out of contracts or leases quickly, and so you have to wait. And some decisions take time for them to actually come to fruition and the changes to happen. So let's focus first on profit. Everyone wants more profit. So we're going to examine a business that does $1 million in revenue and has a profit of $50,000. This represents a 5% profit margin. According to the book, we know that this business should have a target of 10% profit. Normally, if the business owner wanted to double profits, the standard approach would be to double revenue. But let's face it, going from 1 million to 2 million is hard work. And it takes time. So let's find an easier way to achieve this. The simplest way is to increase prices by 5% and make no other changes. Now you have a 10% profit margin. No extra work, but double the profit. I understand in some businesses you can't increase prices because it's a commodity product. However, if you take some time to think through it, you may find a way. It could be raising prices on certain offerings. I have clients that have too much demand, raise prices, and I'm going to tell you, they saw no pushback at all. COVID's made everything crazy, and so certain businesses are seeing massive demand while others are struggling. But even the restaurant business is adding to prices, blaming it on COVID, and they're getting it. The second way to double profits is simply to cut spending by about 5.5%, which also leads to a 10% profit margin. Again, it's thinking time to investigate where's your money going, Can you negotiate better pricing? Can you cut on unused services? You may be paying for multiple services that overlap. Maybe you need to consolidate. Maybe you're still paying for stuff you no longer use. If you haven't taken the time to look at your spending in the past year, go look. Also, ask your employees, where are you wasting money? Offer them a bonus to help you cut. You might be spending money because you always did it this way, but new technology makes the old way wasteful. Take the time to think about it. Another big way to cut is to reduce mistakes, especially in the building industry. Mistakes cost a fortune and they really crush profits. So maybe one way to do this and one way to cut is to say, what are we doing with mistakes? Maybe you're in a service business. Do you need to go back and reservice because the first time you serviced, something wasn't done correctly and to the customer's content, and now you have to send somebody back out? Well, that's just money out the door. So sometimes it's creating better processes and systems and checklists to make sure you're doing it right the first time and not making those mistakes. Another way might just be to improve the efficiency of your processes. How do you get more done in less time, making you more efficient? Sometimes you have to spend money to increase efficiency that allows you to save money. Again, talk to your employees, especially the frontline people. They know what's going on. And reward them for what they do. If someone can save you $1,000 and you hand them $100, you're still just got a 900% return on that $100 that you handed them. And the more people that start getting $100 handed to them, the more they're going to help you cut costs. So often we're so busy running the business that we don't focus on working on the business. And because of that, money is leaking everywhere. It's the biggest thing I do with my clients. I look for all the leaks and we start plugging them. Remember though, don't focus on the teeny leaks. Focus on the big leaks. Think about where is big money draining out of my business and how do I fix it? If you noticed, all three of these require thinking time. They don't require you to work twice as hard to make twice as much. We like to work less, make more. I highly recommend thinking time. Even if you carved out 15 minutes a week, it could make a massive difference. If you're not following me on LinkedIn, you should, because twice a week I talk about thinking time from the book, The Road Less Stupid, and what you should think about this week. So please connect, let me know you're a listener, and watch the videos. They're really short. They're about 3 minutes and give you actionable thinking tips. Here's some other factors you can change over time. Inventory purchases. Making sure that you have the appropriate levels and the right products and the appropriate amount of products. If you've got too much stuff and most of it isn't selling, well, all your profits sitting on the shelf degrading over time. Taking the time to find higher margin products and maybe an alternative supplier. All my retailers pivoted in 2020, adding other lines, changing the way they did ordering. One of the other things retailers do is if you have to pay up cash up front for your orders, is as they sell the items, they make sure to create a separate account and they put the cost per item aside into the separate account. So it's time to order, they have cash. Now, here's the cool thing. If you're paying cash for your orders, you might be able to ask for a discount. Again, a 3% discount is tremendous when we're looking at a 5% profit margin. On top of that, it's no longer a struggle at ordering time because they have the money to pay for the order. No anxiety. I want to share a story on this. And this probably explains why Sears is in so much trouble. First off, they were one of the first retailers to have great customer data. The problem is they didn't use it. When they owned Land's End, they would have their clothing in local Sears stores. Now, this is popular amongst the private school crowd and the public schools that have uniforms. The problem is they would send the same colors and the same clothes to every single store, but the demand was local. So if a local school said, hey, these are the pants we use and we want the maroon shirts, more often than not, they would be out of maroon shirts immediately, and the green ones never sold. So they had to put them on sale. How silly is this? Why not send what the people want? Had Sears taken a few minutes to think about what does this store sell? What is local demand? What do the people want? They would have had a better chance of success. I do this a lot with my clients. My clients will say, hey, should I bring in this item? It looks really profitable, and they get excited about it. The first thing I tell them is, well, can we take pre-orders? It could be a new service. It could be a product. It doesn't matter. Reach out to your clients and say, hey, we're thinking about bringing this in. Here's the price. Do you want it? Cost you nothing but a few emails, asking a few questions. If your customers are clamoring and say, yes, 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 well, now you know what to order. Now you know to go forward and ramp up for that product or service. But if you hear crickets, you just saved a lot of money. And that happens a lot with us. We're all excitable and we all chase that shiny object syndrome. Another thing that's going on right now, and it's kind of late in the game, but businesses are renegotiating their leases if their business was affected. Or if the shopping mall or the place that they're in, if a lot of the other businesses are effective. Here's the thing. You've got to also figure out your moving costs, because if you're going to move, it's more than just the lease cost. How much does it cost you to move your business? How much time is that going to waste? And so forth. If you're on strong ground right now, the other thing you can think about is, can you buy the building you're in? It's a great way to invest your profits to create another stream of income, because even if something happened to your business, someone else could lease your building. And if you sold your business, well, you could also get not only the money for selling your business, but also future rents. Now's a good time to think about it. Is there an opportunity in this moment because of what's going on from COVID for you to be able to do that? I should have probably mentioned this earlier, but one of the tips that I have for people who have recurring expenses that are automated, especially if they're hitting your credit card, is to call your bank, your credit card company, and say, hey, can you send me a new credit card number? Close out this number. You don't change the account. You just ask for a new number for it. What happens now is everything that's automatically recurring and hitting that credit card and people are just charging against you, well, they won't be able to anymore. Now you're going to have to give everyone a new number. This causes friction. And here's the thing with friction. If there's enough friction there, you may stop paying for some of the items because you don't get much value for them. You might cancel them. It also might cause you to have a conversation with somebody and say, hey, is there an alternative to this? Something that costs us less. It's a great way to force the action to take place. Thinking time also includes forward planning. We've had many episodes on future cash flow forecasting. This is nothing more than looking ahead and planning for when your bills and your accounts payables are due, and matching it up to when you expect revenue to come in. I got to tell you, I've been running my life like this for over 30 years. I do it in my software. And you can do it too. You can actually put in QuickBooks future checks to be paid, and it will show you your balance in the future. And you can look and say, okay, here's my shortfall. I've got 30 days. Will I be able to cover it with revenues? You can also do it on a simple spreadsheet. You can do it on a calendar almost. Figure out the way that works for you. It's also pretty simple, and maybe there's somebody in your company who likes doing this. Well, give them the job. We don't have to do everything ourselves. It's not our job to do everything. Our job is to find the right person to do it. And even if they're pretty close and not perfect, well, that's good enough. I think we need to realize sometimes that perfect is the enemy of good enough. And good enough, if it gets us the majority of the way there, it may not be worth the extra effort to be perfect. Again, future expenses that you have to pay are not a surprise. It's more that you forgot. So remember to keep track of this. The other thing that's popped up recently is the EIDL money. The government increased the amount of money many small businesses can get. And so the question comes up, should I take out more money in a loan? The answer is, it depends. Cheap money is nice. It's a great inflation hedge. But I only recommend using money to increase revenue. So your invested dollars that you're going to put into your business need a return. So if you're using this loan money to finance your normal operations, it's a no-no. That means you're spending too much, and you're going to get yourself in trouble. You're kicking it a little further down the can, but you're also putting yourself into a much bigger hole, and we don't like that. However, if you're using the money to grow your business, and you've thought it through, and you've tested it like we talked about before, then it's a good choice. How much is spending those loan dollars going to return to you in profitable business? That's the question you need to ask. That's the thinking question on if you should borrow more. You can also use it to retire higher cost debt. Here's the thing. I don't want you to replace debt on a 5-year machine with a 5-year note with 20-year debt, because you don't want to pay for 15 years of something that you no longer have. It's, again, you're spending future dollars on today's issues, and that is also another no-no. So we want to keep the appropriate timelines for this. Make sure that we're doing it appropriately. A little thinking now can help you tremendously in the long run. Lastly, it's tax time. So if you think your tax rate is going up, you may not want to accelerate depreciation and write-offs, because getting the depreciation and the write-offs and the deductions in a higher tax rate environment may be more beneficial than getting it today. I don't know what the future is. I can't predict it. But from what I'm seeing, I don't think rates are going to go down. It's probably a good bet that they're going to go up. It's a great conversation to have with your tax accountant. Also, now is the time to schedule an appointment with them to ask what you can do for tax planning for 2021. Here's the thing. You need to make sure it's June, July timeframe, maybe even August, not much later than that. They're still working on taxes right now, and the deadlines got pushed to May. When you do that, bring your tax return in. Have them explain the drivers of your taxes. Ask them, what are they ignoring that you're handing them? You hand them a stack of receipts or papers, or you think something's deductible. Maybe they're just pulling it out of your QuickBooks. And it's not. And I think that's an important conversation for you to have with your tax accountants. Because if you think you're doing something and you're getting a tax deduction for it and you're not, well, surprise, thinking time. And let them tell you what you can start to do for 2021 and long term to improve your tax situation. Now is the time to do that, and give them a little time to rest and free up their brain so they also can put their thinking hats on. The theme for today was thinking time. So I leave you with this. What do you need to think about in your business? And when are you going to put thinking time on your schedule? Remember, you don't need more resources. You need to be more resourceful. We focus on the bottom line. If you want a done-for-you service, you can have me as your Chief Profitability Officer, because you have your zone of genius and want to spend your time doing what you love. I only work with a handful of clients, so they get my full attention. I work with business owners who have or are growing to $500,000 to $5 million in revenue. You can use the scheduling link in the show notes to get on my calendar for a good fit conversation to see if I'm the right person to support you and how I can help you. If you want to learn about living the life of your dreams, check out my other podcast, Richer Soul. As we close out, let's repeat the mantra. Revenue is vanity, profit is sanity, and cash is king. Have an abundant and profitable week.